Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 4th, 2025, and we're diving into the third quarter earnings report of Primoris. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Primoris has reported a strong third quarter, and I'm excited to break down the numbers and insights with you.
Revenue and profitability overview. Let's start with the top line. Primoris reported a revenue of $2.18 billion for Q3 2025, marking a 32.1% increase compared to the same period last year. John, what drove this significant growth?
The growth was primarily driven by strong performances in the energy and utilities segments. The energy segment, in particular, saw a 47% increase in revenue due to growth in renewable energy and industrial activities. This robust performance translated into a net income of $94.6 million, up from $58.4 million last year.
And how did this impact their earnings per share?
Primoris reported an adjusted EPS of $1.88, which significantly beat the forecast of $1.27. This reflects their effective cost management and operational efficiencies despite a slight decrease in gross margins.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Primoris reported an operating income of $137 million. How did they manage to achieve this?
Primoris has been focusing on cost control and leveraging administrative costs, which is evident from their SG&A expenses, which decreased as a percentage of revenue. Additionally, they benefited from a significant reduction in interest expenses, down to $7 million from $17.9 million last year, due to lower average debt balances and interest rates.
Looking ahead, what can investors expect from Primoris?
Primoris has raised its full-year guidance, expecting EPS between $4.75 and $4.95, and adjusted EPS between $5.35 and $5.55. This optimistic outlook is supported by their strong backlog and growth opportunities in solar and natural gas generation.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did the utilities and energy segments fare this quarter?
The utilities segment saw a 10.7% increase in revenue, driven by power delivery and gas operations. Meanwhile, the energy segment experienced a substantial 47% revenue growth thanks to renewable energy and industrial activities. However, both segments faced lower margins due to increased costs and unfavorable weather conditions.
Primoris also announced a dividend. Can you tell us more about their capital allocation strategy?
Indeed, they declared a dividend of 8 cents per share, reflecting their commitment to returning value to shareholders. With a strong cash position and a backlog of $11.1 billion, Primoris is well-positioned to invest in growth opportunities while maintaining shareholder returns.
Key takeaways. In summary, Primoris has delivered a strong third quarter with impressive revenue growth and earnings performance. Their strategic focus on energy and utilities, coupled with effective cost management, has positioned them well for future growth. John, any final thoughts?
Primoris' ability to capitalize on market opportunities and their raised guidance for the year are promising signs for investors. Their strong backlog and financial health suggest continued success in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Primoris' performance in the comments below.